A few things we want to go over this morning is gold and crude. Crude this morning we got support. I don't want to stay on here too long this morning, but I want to go over what I'm looking for. If you look at crude oil, we got great support here at the 92 level. 92 is a control. If you look at the long-term profile levels, that shows us that the control point is obviously a great support area to watch for. The inflection point if we get a break retest. So what I'm looking for this morning, if this market's going to break back down, we're going to be looking to take out these lows if we get through the 92. So a key level for you to watch this morning would be this level, 92.93. Now it bounced really hard this morning once, or actually twice off the control point, pretty fast to get in. So that is a big level. If we do break that level, I see us taking the lows out at 45. It should be about a $500 trade on our hands. Now, if we do want to continue to the upside, a break of this 42.50 level and a retest will continue this trend to the upside. So those are the two hot spots to watch for this morning. We've got resistance at these highs. This is where we did a corrective wave this morning. It got inside a high value, retested the corrective wave here. That was a short down to the control point. So that's going to give us nice resistance here at 45.50. We have resistance, support at 44.92 to be exact. So any break below that 92, I really see this market falling apart, breaking the lows. Any break above the 42, 46.42, we should break, retest, and should have a nice continuation. Now, what I want you to look at, the difference in when you want to trade on J signal, is the difference in crude and gold. If you look at gold, I want to put them beside each other real quick. If you look at gold this morning, here's the difference in trading the J signal setups. You don't want to trade the middle, okay, with J signal. You don't want to trade the middle. You want to let it break out, retest. So what we want is we want to trade off market profile. The same thing on this white chart is how we trade off of the black market profile chart. We want to trade off profile levels. So your best setups are going to happen when you break, retest these levels. So if you trade anything in the middle, you're going to have a low probability trade. So we want to stay away from trading the middle on J signal, and we want to let it break outside of HVA or low value area, and then we want to look for a retest of that area, just like gold produced a nice little trade here this morning. This is the best setup you're going to get as far as a J signal goes, as far as a high value or low value area. When it rests right on high value or low value and get a signal, those are going to be your best setups you're going to get. It's allowed to come down to this black volatility line and give us a signal. That's what happened on crude this morning, right here. It broke outside of it to give it strength, but then it broke back to give us a nice little long setup here. So, just make sure that you understand you don't want to trade the middle of J signal per se, because that is where you're going to get stuck in a chop market. Let's try to avoid those situations. Gold was a nice little play off of the high value so far. The control is pretty fast off of the market profile for crude, but you want to try to get involved in all these markets when you get, there's your trigger to look for a trade. When you get outside of value, when you get back inside of value here, that weaken the market for a corrective wave. Those are the two big inflection points so far that you want to trade off of in crude this morning. If you're trading JSON, there's two spots. Here, the first break outside of value. Here, the first break back inside of value. And that gave a corrective wave. All right, so it was very pronounced on the larger time frame if you look. You can see what I'm talking about. This gives you a little better example. If I go over to the corrective wave, you can see if you get back inside of HVA, right, you look for the first retracement. You get back outside of HVA, you look for the first retracement. So you want to try to get involved on the first retracement breakout. okay, if you're trading off of the white chart. Do not get involved in here. You get involved in here, you're going to get chopped up. So you get one shot at it. You get one shot on the break outside, and you get one shot at break inside. Now you'll have multiple retracements in hard trend days, but the rule of thumb is that when you're trading, and this works on all markets, doesn't matter what you're looking at. It works on all future stocks and right across the board. So currency, you got to make sure you look for the first break inside or outside. So when I'm doing this and I'm looking at these various markets, this is the time that's going to tell me right here. That's going to let me know that I'm weakening or strengthening in the market. And that will tell me the first retracement. Look for it. You want to avoid this. And it's all markets right across the board. Avoid the chop. You're going to get one shot at a break inside or outside. So when you break outside of HVA, the market strengthened. When you break back inside of LVA or HVA and you got a trend change, the market is weakened. So you try to get the corrective wave short here with negative market delta, and you try to get the motive wave here with positive market delta. So those are the only two viable shots as far as this chart goes. When I'm looking at the Fibonacci chart, that's the only two viable setups that you want to get involved in. Why? Because you broke outside, it strengthened, and you broke back inside, it weakened. Okay? Stay away from the chop. And I cannot stress that enough. If you get in between HV and LVA and HVA, you start trading the chop inside of it, you're going to do yourself more harm than good. All right, so you don't trade, just because these Fibonacci dots come up, you don't trade every single setup. Okay? All right, so that's how we like to do it. We like to break outside of high value area, look for the first retracement, market gelled up, break inside of HVA, and market gel down. The easiest way to remember this is this. It's a 1-2-3 pattern. I used to trade this in soybeans and corn back in the 90s when I first learned about this 1-2-3 setup. And it works today. It continues to work today. It's called an ABC. It's either going to break inside, outside of HVA, LVA, or it's going to break back inside. It's the only two patterns you need to understand on this chart. You break inside, look for the first retracement short. Break outside, look for the first retracement long. Okay, same way down here in LV and HVA. You break outside of LVA, you look for a retracement short. You break back inside, you look for a retracement long. Okay, pretty simple setup, but very easy to implement when you understand the concept. That is the only two possible scenarios you have with this chart. Either you're weakening or strengthening off a high value, low value area, but stay out of the middle. Okay, stay out of the middle. Gerald, go over to gold real quick. Set over to gold real quick, man. If you look at gold, over here, guys and gals, this is what we want. We want to trade off value. So we always go over these black market profile charts, but we really don't go over these J signal charts too much. And you know, you have a high value that's listed in red and a low value that's in green. This is going to be your best setup. You break outside of high value, that shows market strength, especially if you're trending hard. Look at our trend filter. Our trend filter's up. So that gold setup, which is a really dynamic setup on our first retracement. And it's really pronounced. If you look even the larger time frames, it was pronounced on the larger time frames also. On the larger time frame, if you look at it right here, use a 4 or 5 sim on it, you can see it's really pronounced. It broke outside. It gave your first retest. Look how pronounced that is. Very nice trade setup for the upside because it stopped right on market profile. Okay, so that's what we want to do on J signal. We want to look for it to break inside or outside of profile, retest, and then give positive or negative market delta. Okay.